Hello, welcome back to the channel. My name is Garrett. So nice to see you. Today, I really wanted to talk about how to buy a home from a relative or family member. Everything I've found online makes it seem extremely complicated when it is, in fact, really easy when you work with the right person. For those of you who are new here, my name is Garrett. I run Archetype Mortgage. We are a brokerage based in Texas, and we would love to help you purchase or refinance. And on this channel, we do daily mortgage market updates, and we have a lot of long form educational content similar to this as well. So please do check that out. Without further ado, let's get into how to buy a home from your family member. So why do people want to buy from a family member? More often than not, it's because someone passed away. In this scenario, the estate can sell to a family member. And in fact, that is probably a good idea and best overall for the family. Unfortunately, people are often ignorant to how easy it is to get a loan when you're buying from an estate or from a living family member. And more often than not, they sell to the open market or they sell to a house flipping firm because the house needs a little work. If you want to use a realtor, you can, but it will cost you money. If you do not use a realtor, I do recommend running the sales contract past a real estate attorney. It might cost you a few $100s, and it's going to be way cheaper than a realtor. So first off, everyone has to agree on the terms. There's a couple of special things that can happen when you're buying from relatives that cannot happen when you're buying from strangers on the open market. As usual, there are loan programs that have minimum down payment requirements, and those vary depending on the loan program. What's really cool is if we keep this simple, and if the estate or if the relative is willing to give you a good deal, you don't need to bring any money out of pocket because of what's called gift of equity. So let's assume it's a conventional mortgage. You want to put 20% down to avoid that mortgage interest. Let's assume the value of the home is $100,000, but your estate or your relative is willing to sell it to you for $80,000. Good news. Well, instead of putting 20% down of $80,000, if the appraisal comes in at $100,000, you can put the sales price at $100,000 and then simply just get a $20,000 gift of equity from your relative or the estate, and then the loan qualifies at 80% loan to value for that $80,000. So you would not need to bring in any money out of pocket except for closing costs in that scenario. And if the relative or the estate is willing to negotiate further, if there was a few $1,000s in extra closing costs involved, you can also get a gift to cover those too. So you can actually come in buying from a relative or an estate with $0 out of your pocket and get a conventional loan with no mortgage insurance. Really cool stuff. The second part of this video that I wanted to cover is in the scenario where the house is not in good shape. The house might need a little love or a lot of love. But what most people don't know is there are renovation purchase mortgages. This example gets a little more complicated because there's current market value if it was in good shape, and then there's the actual value in the current condition. So for example, to keep it simple, let's say the current condition value is $100,000. But let's say if it was in turnkey condition, for example, there are comparable sales in the neighborhood and the zip code that show home values at $200,000. So the estate or relative, instead of selling that house that needs work to a cash buyer or a flipper and not getting nearly as much money as the house is actually worth, one of the relatives can actually purchase this from the estate and use a renovation loan to purchase and renovate it all at the same time. So you can compound this awesome gift of equity in my first example with also being able to finance the renovations to make the property like new again, exactly how you want it, into the loan. So in this example of the property currently being worth $100,000, but after it's fixed up, it would be worth $200,000. Let's say you needed $50,000 to get a new roof, a new kitchen, a new bathroom, updated flooring, updated windows, etc., etc. Instead of a family member going out and buying a house for $200,000 with someone already having done those repairs, you can sell to that relative or via the estate for $100,000. They can finance $50,000 of additional renovations, and then when all the work is done, they will have forced equity of $50,000. So instead of that money going into the flipper's pocket, it actually stays in the family. Let's recap real quick. The first part of the video was talking about gift of equity. The gift of equity means that if the relative or estate is willing to sell to a family member at a discount from the market value of the home, then you can give a gift of equity to potentially help the home buying relative avoid any cash out of pocket and potentially even mortgage insurance if they qualify for a conventional mortgage. It's huge and saves a ton of money. The second piece was if that house, more often than not, which unfortunately is an estate because someone passed away, maybe that house hasn't been repaired in 10 or 20 years, needs some love, needs some fixing. Instead of selling it for a major discount to a flipper, you can keep that wealth in the family and sell to a relative, and I can help you with a purchase renovation loan, where a contractor will come out and do all that work for you. And once the work is done, it turns into a normal 30-year fixed rate mortgage. And you have built-in equity because the work is going to be cheaper being done as a purchase renovation compared to buying it on the open market from someone who already did all that work. Make sure to subscribe and follow, like and comment down below. Have you ever purchased a home from a relative? Have you heard of this before? Did you even know it's possible? I hope that everyone learned something valuable here because there's families every single day that sell property at a loss when they could be benefiting their family's net worth as a whole and keep that money in the family instead of giving it to strangers. Have a great day. See you on the next video.